mortgage forbearance programs ending, eviction moratoriums ending, the threat of rising interest rates in the future, there seems to be quite a few negative factors that might lie ahead for real estate. Yet despite this, I've been making offers regularly on properties, and I'm getting actually very close to closing on one, probably within a matter of days as of the posting of this video. Am I simply ignoring all of these negative factors? Am I stupid for investing in real estate while things are very hot right now? Well, I suppose maybe, but I want to explain that rationale in this video. But before I get into that, I just want to introduce myself for anyone who's new to the channel. My name is Jack Duffley, and I'm a 24-year-old real estate investor and attorney. And on this channel, I cover a variety of topics as they have to do with investing and personal finance. So if you like that sort of content, be sure to have a look around the channel. And if you like what you see, be sure to subscribe. But like I said, I've been making plenty of offers on properties. I'm under contract on one that I'm close to closing on. Even though the market has been incredibly hot across the nation, the property I'm investing in particular is one in Chicago. I'll go into more details on that actual deal once I actually close on it. I just want to close on the property first before I do a full deal analysis for the channel. And I fully acknowledge that the market is very hot and there are plenty of negative catalysts in the future. Might have a number of foreclosures coming online, or at least more supply than we've had in the past, and more supply would lead to less prices. Of course, interest rates are at all-time lows and probably won't get any lower, and if anything would get higher before they get any lower because, well, they're already at rock bottom, and who knows, maybe we will get negative interest rates, but that would have its own set of problems. But the point is, I'm not ignoring the overarching theme of the market, which is lots of uncertainty and lots of risks. And this brings me to my main point, and that's that I don't invest in real estate markets, I invest in real estate deals. You might be thinking, but Jack, what do you mean? That doesn't make any sense. When you invest in a deal, you're inherently investing within a market as well. Yes, but that's not really what I'm getting at. What I'm getting at is that real estate is unlike many other markets in that you can get a very good price on a deal in an otherwise hot market. For better or for worse, there are lots of inefficiencies in the real estate market compared to many other markets. Partly this is because transactions are a lot more cumbersome to actually get through. You also have way less replicable transactions since each piece of property is completely unique. And even within a large condo development where many of the units look quote unquote the same, they are inherently different. You're going to have different floor levels, different floor plans, different locations. Every piece of property is inherently unique. So it can be hard to actually compare properties in many cases. At the same time, with the amount of debt in the system, there's always a chance that borrowers get underwater and they are forced to sell something very quickly to try and recoup as much of their investment as possible or otherwise pay their creditors. So they might sell a property at a discount there. And that's before we even get into the full foreclosure market, which often sells properties at a very steep discount compared to what they might actually be worth. And even when placed on the MLS or the open market, properties can sell well below their quote-unquote intrinsic value, so you get a discount in that case. A listing agent might do a very poor job in selling a property, or it might be a listing by an owner and they do a poor job, or whoever's listing it just doesn't do a great job and doesn't necessarily bring in as many potential buyers as they could have, so you don't have as much of an efficient market as you might otherwise when something is marketed properly. All I'm really trying to say is that there's often more opportunities, even within a hot market within the real estate market, to find good deals. And you can compare this to investing in something like an indexed fund in the stock market, where what you see is what you get. You're not going to get any better of a price on that particular stock unless you do some sort of weird workaround magic that I'm not aware of, because the market is much more liquid there. The shares of something like the S&P 500 are going to transfer much more freely, and you're going to get a much more efficient price relative to all the buyers and sellers out there, because with a piece of property, you are not going to get that sort of thing. With a piece of property, you might have a handful of buyers going for any one. Maybe in some hotter markets, you're going to get many dozens of buyers, which you're certainly seeing in some of the hottest markets, but still there are some deals that would go under the radar, assuming they even get on the open market at all. That's not really the case with the stock market, at least publicly traded stocks, ones that have very liquid markets and thus more efficient pricing. Now, I'm not talking about actually accurate pricing to the intrinsic value of that company, but you are not getting some massive discount to the actual price that other people are paying, so you don't have that sort of, I guess, arbitrage opportunity is kind of a one way to put it. Whereas with a great real estate deal, you could theoretically buy it for below its actual market price if you were to then go relist it properly somewhere else, and then you could make the money there on the equity that you'd gain from the discount that you got in the first place. You're not going to be able to do that with a stock. If you buy it and then try to sell it a minute later, unless something crazy happens to the whole market, you're not going to get that sort of price arbitrage, which you can get in great real estate deals. And not all great real estate deals are like that, where you're just going to sell it immediately. That's actually pretty rare. But typically what's going to happen is you might have some equity built in in the beginning so that if you want to sell it or if you want to refinance it later, you can pull that money out and invest it elsewhere, or otherwise you're getting a discount compared to the actual rent yield of the property. And this deal that I'm about to close on in Chicago fits that criteria for me in that the rent yield looks very good compared to the actual price, which is kind of hard to come by in many of the nicer areas of Chicago. Things can get very expensive relative to the actual rent that you can get, and that's not something that I want to do. I don't want to overpay for the actual cash flow that I could get, if I can even get cash flow at all, since I'm always trying to get something that is at least cash flow neutral in the Chicago market. And that's with the assumption that I have great financing terms, so I'm still getting plenty of principal pay down there, so I'm getting return that way. It's different than maybe the more cash flow oriented approach that I'm taking in a market like Indianapolis, since I can't use owner occupied financing, which is what I'm doing on this deal in Chicago. My plan is to live in the property for at least a year or so, and then I'll move out and rent it out as a rental. When looking at some of the other properties around it, it seems like it is selling for a bit cheaper than what it's probably actually worth, at least when you factor in the rent roll that you could get on this thing. Again, I'll do a more detailed breakdown on this actual deal once I close on it. Assuming I close on it, I don't want to count my chickens before they hatch. So subscribe for that if you want to make sure you see it. But all of this is a long-winded way to say that I invest in deals, not in the actual broader real estate market. Now, of course, I might adjust my investment criteria a little bit if the risks seem abnormally high. If I think that there's going to be some major crash soon, I might demand a slightly higher discount on a property or otherwise a higher yield on my cash. But just because most deals might be selling for a premium doesn't mean that all deals are, and there's still plenty of ways to make money in real estate, even in a very hot market. At least when we're talking about the buyer side. As a seller, you can make plenty of money in a hot market if you want to cash out or move that money somewhere else, since you probably have lots of buyers chasing your relatively finite asset. Another way to mitigate some of the risks that might be coming in real estate would be to increase your actual reserves, especially if you're using a lot of debt, which in my case, I'm using a pretty significant amount of debt. So I'm coming into every single deal with a pretty substantial reserve fund ready to go, so that if something bad happens to either my job, to the actual rent roll on the property, I can cover it with the reserves for a while, or if there's some repair that comes up, that's what the reserves are for. What a lot of people unfortunately do in hot markets is they over-leverage themselves. That is, they take out too much debt relative to the amount of reserves they have, to the amount of income that they're bringing in, and they often will reduce those reserves too much to where they can't weather any sort of storm in the short term, and that's what leads to foreclosure crises and what we've seen through history. Making money in any real estate market requires discipline. You have to know what you want out of the deal. If you want to make sure that you have at least positive cash flow, then don't invest in non-cash flowing deals. And if you can't find one, well, look elsewhere. It's going to take a while potentially in a very hot market where rent yields might not be catching up with property prices, which we've seen in some markets recently. But don't let some vague fear of a potential crash be what shies you away from getting into a really good real estate deal. Another way to look at it is asking yourself, would you have bought some property in 2016 or 2017? Chances are you probably would have, given the prices of properties now. So if you would say yes to that, then if you could get a property for 2017 prices today, why wouldn't you do it? I'm not saying these deals pop up all the time. They definitely don't. And they might take many, many offers and many deals that you actually get under contract before you actually close on a great deal. It takes a lot of time and discipline. But when you find a great deal, you're not going to be worrying about the overarching market because you have a great deal. That is all that really matters in the grand scheme of things. Now, what makes a great deal definitely depends on your specific criteria. And depending on your actual criteria, that can determine how easy it is to find one of these quote-unquote great deals. But it very much depends on your risk tolerance and your preferences. For me personally, whether it be in good times or bad times, I want to invest in great real estate deals. And what a great deal is won't really change much between good and bad times. The amount of them might change, but also the tools at your disposal might change in any given good or bad time. In bad times, you might see a lot of credit dry up. So even though properties are cheaper, they might become harder to acquire just because debt's not as freely flowing. So there are plenty of other risks in bad markets too, or at least a different set of bottlenecks to actually getting into new properties. Whatever the case, for me, when I invest in real estate, I'm investing in the deal, not the market. Anyways, that's all I've got for today. So if you like this video, please like it, since that would help the channel out a lot. And if you like this sort of content about investing and personal finance, and I do a lot of real estate content as well, then definitely subscribe, since that would also help the channel out a lot. And I wouldn't want you guys to miss out on any of my new content, since I put out new videos every single week. And check out some of the free stuff in the affiliate links in the description below. But until next time, take care.